Hello, everybody. So today I'm going to launch for you a new product on Smallcase. But this product that I'm launching may be something that you guys might already be aware of as a product that has been there on the Wright Research website. So what we are launching today is the Wright mutual fund baskets on a better platform, on a better technology, which is Smallcase. At Wright Research, we've been offering these mutual fund baskets, which do tactical asset allocation, which use quantitative models to allocate to mutual funds for different risk profiles for a long time. And we've had more than 500 customers who've invested in these products over the past few years. And what we're going to do is launch these products on a much better technology, much better platform, which is the Smallcase mutual fund transaction platform. Investing in mutual funds can be extremely overwhelming. I know that, at Right Research, we love equities. We offer these equity baskets, but there are a set of customers, right, who have a preference for a slightly more passive vehicle, which is a mutual fund basket, right, where you don't have to transact proactively, where you allocate for longer time and you can sit back and relax, right? But looking at the mutual fund world, it can be highly overwhelming, right? Even choosing a simple equity fund or a simple short-term debt fund, you are overwhelmed with a lot of options, right? And that is where you need the confidence on how do I select the right set of funds for my risk profile, which will help me sail through different market conditions, right? So at Wright Research, what we do is we create a basket of 6 to 10 funds for different risk profiles where, we will have our quantitative models which selectively look at a whole history of mutual funds, looking at their track record, their expense ratios, the AUM that they carry, and select the most suited fund for the current market scenario. So, our mutual fund baskets, also like our equity baskets, are not very static, right? They are dynamic. But again, you don't want to trade too much in mutual funds, right? When you're trading in mutual funds, you are very aware of the short-term, long-term tax, and you tend to keep these funds for the slightly longer duration. So these baskets that we offer will be only rebalanced once in 6 months. And we use our proprietary technology, proprietary research to create these baskets. And they have been, highly successful as investment options while we've been doing it for the last 4 or 5 years, right? So let me take you through, what we are doing on the Smallcase platform and why it might be a good idea for you to invest into these. So instead of using guesswork or gut feeling, we use quant models and AI-driven performance and risk forecasting method to select the optimal mix of mutual funds. Our tactical MF strategy is data-driven and unlevered long-only strategy. Under the hood, this is how it works. Each portfolio that we curate will hold 6 to 10 mutual funds at any given time. And the exposure, so instead of using it would be capped at maximum 15% per fund to ensure proper diversification. We would be highly cost aware, looking at the expense ratios. We'll be looking at the taxes also, right? We don't want you to pay short-term taxes unnecessarily. And even when we are maybe shifting our allocation because it is necessary, we try to switch funds within an AMC so that you don't face exit charges, right? So it's optimized for your cost. It would be capped at maximum in mind also. But like I said, it would be tactical because we believe that the market can be dynamic, right? And sometimes investing in large cap funds makes sense, and other times small caps, right? So that's why uh, within our engine we're dynamically allocating to these funds, and you can sit back and allocate to this strategy without taking the headache of constantly monitoring your portfolio by yourself. Say that there's so many options for mutual fund allocations in the market. You see so many platforms where you can choose these funds. Why sort of trust our process? So see, our process is backed by decades of data of these mutual funds, where we look at these funds track records. We look at how much allocation as an investor you could have in different categories, right? So for example, a conservative investor would tend to have more debt allocation, and an aggressive investor could allocate more to funds where like there is more risk, for example sectoral funds or small and mid cap funds, etc. So first of all, we are catering it, we're constraining it based on the risk profiles. We also do very tactical rebalancing, right? So it's not like the portfolio is churned very often, but on a 6 monthly basis, you might see 20 to 30% churn, which is highly, highly efficient, right? We say that there's so many options for mutual fund allocation, which saves a lot on the taxation for you. And like I said, we are trying to minimize your expenses by looking at the expense ratio of these funds and also making sure that we are shifting the allocation based on the risk in the market. So like our equity portfolios, these baskets dynamically rebalance based on the market regime. In a risky regime, we will tend to go safer, right? What we've seen is, our funds have allocated more to maybe value investing recently, some quality stocks. They have actually allocated some international funds also, whereas, a couple of years ago, we had more small and mid cap exposure. So there's a lot of, experience as well as statistics built into these funds, which have been proven in the market for the last 4 5 years. And, this would be a great way for you to charge up your investors, and you could be in total control on how easy this is to navigate. Now let me introduce you to our different strategies, right? So each investor is different, and our models target precise risk tolerance in 5 distinct baskets, right? And the minimum investment starts at 10,000 rupees for these funds, right? We try to keep the minimum investment small so you can start allocating your excess cash to these funds, be very, very dynamic with it. Let me talk to you about the 5 funds we offer. So these 5 funds are very easy to understand. They're based on 5 different risk profiles. You have the conservative portfolio, which is built for absolute stability. There you'll see 80% debt allocation, zero credit risk. And in the last 5 to 6 years that we have run, you would see that the strategy would have given a very steady CAGR of between 10 to 11%, right? And the risk is pretty minimum in this particular portfolio. The drawdowns are pretty minimum in this portfolio. And it is, suitable for people who want to take lesser risk in the market, right? Very conservative risk in the market. So typically retirees, or, if you are allocating something for a very, very short term, a conservative portfolio is a suitable tiles. You have the conservative portfolio for you. Second one is a moderately conservative, right? So this is slightly higher risk than the conservative one, but still pretty safe, right? Here you will see that our debt allocation has gone between 60 to 80. It is dynamic. And in the last 5 6 years, it has given a CAGR of around 12%. And again, the risk is pretty small in this portfolio also. The next time for you is our balanced portfolio, which is the sweet spot, right? It is between aggressive and conservative. You will see that a debt allocation can go between 40% to 60%. Equity allocation is high. You will see some hybrid funds over here also. And at 5 6 year CAGR would be 15 16%. Again, the risk is much lower than a typical equity fund for this particular basket. Now we get a little bit more. This is our balanced portfolio, aggressive, and then we have our moderately aggressive basket, where you will see higher returns at a slightly higher risk, right? So debt allocation will be between 20 to 40%. The 5-year CAGR that we've been able to achieve with this strategy for our existing investors, that we have run is between 20 to 22%, right? Again, the risk is less than the equity market because there is some debt allocation here. And then comes our aggressive, and then we have our moderate portfolio. And very interestingly, most of the investors go with the aggressive portfolio that we have. You see between 0 to 20% in debt. And the 5-year CAGR, in fact, for this strategy has been very, very decent at 25%. And it's been a very steady sort of a strategy because it includes a large amount of diversification. Yeah, you are sort of combining multiple equity themes and some hybrid funds, some debt allocation to create a very steady sort of risk profile for you. So for a working professional who wants to allocate for the longer term, I think the aggressive portfolio could be a very, very suitable way for you to allocate. Now, many of you will ask, Ki Sonam, I've seen these portfolios on your website for a very long time. Why are you doing a launch video, right? So, see, we're doing a launch video because these portfolios are now going live on the Smallcase ecosystem. And I know that a lot of investors actually love the Smallcase ecosystem for their execution, right? They're big fans of the app, the technology, and the product. And we are also very excited to offer these excellent research-backed products on a much suitable technological platform, right? Um, so these products are now live on the microsite that you would see. Even on our website, you will see links to invest directly to these baskets on Smallcase, and you can directly go and invest on Smallcase. Obviously, mutual fund transactions on Smallcase will be different than equity transactions. There's no intraday allocation. You would, mutual funds operate on an end of day NAV value, right? Basically, anytime you place, you will get the fund at the end of day closing price. And then, investors are processed to secure RTAs. In this execution process, we only offer direct mutual funds. Smallcase is the EOP or execution only platform, which is acting as the execution layer, and we are providing research to enable you to allocate to these funds. Now, mutual funds have their own infrastructure. So while in equities, you see the moment that you bought a stock on Smallcase, it reflects on your broking account. But sometimes in mutual funds, you might get the unit allocated to you or the folio allocated to you in the T+1 or T+2 day, but it's highly secure, going through the secure RTA system. And Smallcase and us have tested this platform very comprehensively. And then see, I think what we're offering is a basket product, right? It's a fund in a sense. In terms of construction, it's like a research product that we're offering. But it will make sense for you to invest it into it as a cohesive unit, right? Invest into all the funds that we allocate. You can obviously edit and change and manage it at your end, because that's your discretion. But what we offer is a cohesive basket in which you can allocate via the Smallcase platform. How it works is very, very simple. Like the other Smallcase products that you might have seen, you go to the link, you do a easy sign up, and then we will do your digital KYC. You can sign an agreement of research analyst with us, that we will act as a research analyst for this execution. Smallcase will be your execution only partner. There can be a small risk profiling for you to understand which basket might be suitable for you. And then, you get the suitable basket as per your risk profile, right? You can choose between, aggressive, moderately aggressive, balanced, conservative, and moderately conservative portfolio that we are offering. It is extremely seamless how it works. You can invest via UPI or net banking. It's a very smooth flow. And once you invest, you can literally go and relax, because these mutual fund baskets are not rebalanced very frequently. You might see a semi-annual rebalance, right? If you allocate it today, uh, a long time later, right, 6 months later, you would see a rebalance come in, which is when you might see a small amount of churn. It's not excessive churn. You might see one or two funds change, and these are your long-term allocations, and you can totally rely on this system to be your wealth engine on how you are going to invest into the market. So what I would say is that it's an excellent product for you to stop guessing where to invest in mutual funds. You can directly head to the links that we provided. Based on your risk profile, choose the correct right research mutual fund basket that can build your wealth the right way. And I think for people who are looking at these slightly effortless baskets for long-term investments, I think mutual fund investing can be an excellent tool. And we have a lot of conviction in the baskets that we have given, and we've seen excellent results to them. So those might be a great tool for you to allocate your capital and sit back and relax for the longer term.